Hey everyone, welcome back to Corporate Decoder. Today we are diving deep into a very important financial report from T. Rowe Price Global Multi-Sector Bond Fund Incorporated. Now, this isn't just any report, it is a shareholder report, and let me tell you, it is packed with enough numbers and financial jargon to make your head spin. But don't worry, that is what we're here for. We're going to decode this thing and find out exactly what is going on behind the scenes. Think of it like an X-ray for the fund's financial health. Before we dive in, if you appreciate breaking down these complex financial documents into understandable insights, make sure you hit that subscribe button. Also, join our community on Discord. The link is in the description below, where we discuss these filings and much more. So, what are we looking at here? This is a filing called Form N-CSR, which basically means it is a certified shareholder report for investment companies. Think of it as an official checkup on how the T. Rowe Price Global Multi-Sector Bond Fund Incorporated has been performing. It's a snapshot of their financial world as of the 30th of November, 2025. Alright, let's talk about money, specifically your money. This report breaks down the costs associated with investing in this fund, and they show it for a hypothetical $10,000 investment. For the investor class, the costs for the last 6 months were $33, which comes out to 0.64% of your investment. For the advisor class, those costs were a bit higher at $47. Or 0.92%, and for the I class it was the lowest at $24 or 0.47%. Now these might seem like small numbers, but consistently paying these fees over time can really eat into your returns, so it is always good to know what you are paying for. Now for the really interesting part, where is all that money going? Looking at the security allocation, the biggest chunk, 40.1%, is in foreign government obligations and municipalities. That is followed by corporate bonds at 34.5% and asset-backed securities at 11.1%. They also have smaller percentages in US government agency obligations, non-use government mortgage-backed securities, bond funds, bank loans, and securities lending collateral. Let's get a bit more specific and look at the top 10 holdings. The largest single holding is Government of New Zealand at 4.9%, then we have Government of Japan at 4.8%, and US Treasury Inflation Index Notes at 3.7%. Following that are Government of Malaysia and a T. Rowe Price Institutional Floating Rate Fund. It is pretty clear from these top holdings that the fund is heavily invested in bonds and government debt from various countries. This broad diversification across different types of bonds and geographies is a key characteristic of a global multi-sector bond fund. The fund itself is quite substantial, with total net assets of $2,247,081,000. That is a lot of money being managed, and they hold a whopping 13 different portfolio holdings. This diversification is generally a good thing as it spreads risk across many different investments. Now, let's talk about how actively the fund is trading. The portfolio turnover rate is 82.8%. This means that about 82.8% of the fund's portfolio holdings were bought and sold over the past year. A higher turnover rate can sometimes mean higher transaction costs, but it can also indicate that the fund managers are actively trying to capitalize on market opportunities. Let's jump into the financial highlights. This table gives us a really good look at the fund's performance over several years. For the investor class, the net asset value per S-share at the end of the period was $10.07. Looking at the total return for the 6 months ended the 30th of November 2025, it was 3.31%. This is a decent return for a 6-month period. Now, let's look at the net expenses after waivers. For the investor class, it was 0.64%. This aligns with the cost information we saw earlier. Moving to the advisor class, the net asset value per S-share was $10.08. The total return for the same period was 3.17%. For this class, the net expenses after waivers was 0.92%, which is higher than the investor class, as we noted earlier with the costs. And for the I class, the net asset value per S-share was $10.07. The total return was 3.40%, the highest of the three classes for this period. Significantly, the net expenses after waivers for the I class was 0.47%, which is the lowest among the three. This shows that the I class is the most cost efficient for investors. Looking at the statement of assets and liabilities as of the 30th of November 2025, the total net assets of the fund are $2,247,081,000. That is a massive amount. The investments alone are valued at over $2.2 billion. On the liability side, we see obligations for return securities lending collateral, payables for purchase securities, and unrealized losses on forward currency exchange contracts. Now, let's look at the statement of operations for the 6 months ended the 30th of November 2025. The fund generated over $50 million in interest income and another $3.4 million in dividend income. Total income was about $53.7 million. Expenses, however, were around $5.7 million. This led to a net investment income of about $48 million. Then, looking at realized and unrealized gains and losses, the fund saw a net realized gain of over $11 million and a change in net unrealized gain of almost $7 million. Overall, the increase in net assets from operations was a solid $66 million. The statement of changes in net assets shows a total increase in net assets during the period of over $336 million. This is a result of all the operational gains and the significant capital share transactions, where they sold a lot more shares than they redeemed. Looking at the net asset value per share breakdown, the investor class had a NAV of $10.07, the advisor class at $10.08, and the I class also at $10.07. This slight difference in NAV per share for the advisor class, despite having higher expenses, can often be due to how expenses are allocated or if there are minor differences in share structures. In the notes to the financial statements, we find details about their accounting policies. They emphasize that they follow us generally accepted accounting principles, or GAAP. They also mention that they use estimates and that actual results could differ. This is fairly standard for financial reporting. This section is really important because it explains how they value their investments when there isn't a clear market price. They use a hierarchical approach, looking at quoted prices in active markets first, level 1, then observable inputs like interest rates and credit spreads level 2, and finally unobservable inputs like their own assumptions level 3. The majority of their investments fall into level 2, meaning they are valued using observable market data, which is generally a good sign for transparency. This is where things get a bit complex with swaps, futures, and forward currency exchange contracts. The fund uses these instruments to manage risks like interest rate changes or currency fluctuations, and sometimes to try and earn extra returns. They clearly state the risks involved. Noting that using derivatives can be much riskier than direct investing. The dollar amounts here are quite significant, showing a lot of activity in these complex financial products. For instance, the notional amount of credit default swaps where they sold protection reached over $242 million. This means they are taking on significant risk in exchange for potential premiums. This section details some of their investment strategies. They are investing in emerging and frontier markets, which carry higher risks due to political and economic instability. They are also heavily invested in non-investment, grade debt or junk bonds and leveraged loans, which are generally considered riskier but can offer higher yields. This note is crucial because it discusses transactions with affiliated companies, specifically T. Rowe Price Associates Incorporated, the fund's manager. They are waiving some fees and paying others, and there are agreements in place to prevent duplicate management fees when the fund invests in other T. Rowe Price funds, this is common in the industry, but always worth scrutinizing. Finally, in Note 9, they touch upon significant unpredictable events like environmental disasters, war, and pandemics. They acknowledge that these events can significantly impact the economy and their investments, and the extent of this impact cannot be predicted. This is a standard disclosure, but in today's world, it is more relevant than ever. So, what is the story here? The T. Rowe Price Global Multi-Sector Bond Fund Incorporated is a large and actively managed fund. They are clearly playing in a global landscape with significant exposure to foreign government bonds and corporate debt. The use of derivatives is substantial, indicating a strategy to manage risk but also potentially amplify returns, which comes with its own set of dangers. The costs vary by share class, with the I class being the most cost-effective. While the fund generated positive returns and income during this period, the inherent risks associated with emerging markets, high-yield debt, and extensive use of derivatives are undeniable. They're actively trying to find yield in a complex financial world, and that strategy, while potentially rewarding, also carries significant risk. Looking at this report, the fund seems to be strategically navigating challenging markets by diversifying broadly and employing sophisticated financial tools. However, the sheer complexity of their derivative exposure and the risks associated with their investments in less stable markets are points of concern. An investor here needs to be comfortable with a considerable level of risk. That is our deep dive into the T. Rowe Price Global Multi-Sector Bond Fund Incorporated's shareholder report. What is your take on these numbers and what they signal for the fund's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to join our Discord community, linked in the description below. Thanks for watching. See you next time.